Hey everyone, this is Michael Ben-Ghiat. This is the Stock Picks weekend video for June 11th, 2022. So we're going to go ahead and just first start with the current market environment, which drastically changed from earlier in the week. We're going to go through some of the stocks on our watch list. We don't have any on our ready list right now because they all fell off and imploded. And then we're going to go through just the one stock that's left on our portfolio. Before we start, this is here's our disclaimer. Just want to say that everything presented here is provided for educational, informational purposes only, and in no way should be considered investment advice. So we've now moved back to red on our stock environment indicator. We're still looking at the current best strategy, which has been in place all year, is swing trading, just taking shorter profits. But at this point, we are not in anything. The market really imploded strongly on the last couple of days, kicked us out. And so we have no recommended stock exposure is no positions, even though we do have one left. But we're so close to getting stopped out, we decided to leave it. Maybe we won't, but that's what it is. But one of the things in stock investing is that you have to be very flexible and not have preconceived notions. So one of the things we saw is that a lot of leading stocks started acting really, really well starting about a week ago. And that's something that you'll notice that we sort of said, hey, we're going to start creeping in because we're starting to see a lot of stocks really acting well. And as they started acting well and we started getting some profits, we kind of crept in a little bit more. So we upped our exposure. I think initially it was maybe, 15 or 20%. I think we went to 25, and then really everything started really working on like Wednesday. So we upped it to 50, I think. Now we never actually got there, but only on the accumulation of profits and the stock market and stocks working. In other words, we're seeing breakouts were happening, and not only were they holding and not just immediately failing, a lot of stocks were heading higher and higher, which is exactly what you want to see. So we got all the signs of, this may not be the bottom of the stock market, but it didn't really matter because we are buying stocks. We're not buying the indexes here. And they were all starting to act pretty well. So it gave us the green light to go ahead and buy stocks. So our stock environment indicator actually was at green. And it didn't last very long, but that's how it works. And unfortunately, it just quickly, it reversed, and we quickly, we took some profits on two of our stocks. We took 50% profits, which turned out to be good because one of them, both of them just end up stopping us out. So we ended up with a profit on those. One ended up stopping us out completely with a small loss. And then we still have one left. We took some profits, but we are almost about to get stopped out. And that's Sasol. So that's the way we approach it. You never jump in too much, and you don't just plunge in, and you don't just exit out, because you never know. And we could just be off to the races again next week, but it doesn't look likely. So let's go ahead. I'm going to go ahead and switch over to the charts. Give me 1 second here. Okay, and let's go ahead and take a look at, let's look at Sasol, our first one. So that's SSL ticker. So this one we bought, or we're currently just up a percentage. We bought it at 25.60, excuse me, when it broke out. Now we had a couple of days where it was a little dicey, but we had a nice rally. We had a day here where we kind of reversed, a little bit of a warning sign, and we've just kind of come back down to the top of the base that we brought it. So it's really not doing anything wrong yet. We're still up on it, but it's looking a little dicey. We actually moved our stop up to break even just to protect our profits. No use giving it all back. So we're pretty close to getting stopped out. Our stop is at 25.60, and we're just 28 cents away from that. So we might get stopped out on Monday, but even though it looks like after hours, we're actually down there, but this is not really that useful. That doesn't mean that we're going to open there. So that's where we are on that. But let's take a look at a couple of the other ones that we did lose. Now you can see how quickly this market just changed. So Eagle Bulk Shipping, this one was making a nice move. Look at the nice trading here. We had tight trading here, and then we had on Wednesday the biggest drop on huge volume. In fact, it doesn't look, and these charts are a little bit compressed, but this was a 11.63% drop. Now, we haven't seen anything like that in this whole chart. So that's already a warning sign that this is not what we expected. Just given what it was doing, it was acting strong. We had some nice big up days. Relative strength was heading higher. So the expectation was this broke out and was heading nicely higher. So that was a bad sign to see that, especially on high volume. We had another high volume day. I think we were kicked out on Thursday, or maybe we were on this. I don't remember offhand. But anyways, we were starting to get, now we've had 3 lower lows in a row. That's not good, but we've seen many, many stocks that have all done this kind of things. Here's one we had on our list as a watch list. Again, had a nice little breakout here, a nice tight trading, broke out, got volatile, but it was still holding above this level. And then we had a huge decline, especially intraday. It closed better than off that, but in high volume here. So this kind of action we've been seeing a lot in leading stocks. Here's one that we didn't have it on our list, but just because for various reasons, biotechs I don't like to go into. They're a little volatile. Like this base, and it was a pretty deep 30% base, but you can see it had nice trading. Broke out strongly on this day, but look at this massive reversal and huge volume. This little parachute looking thing here shows the largest volume since the base breakout. So this action, when you see this, a nice cup formed a handle, broke out on strong volume, that's a great sign. But look what happened in the next couple days. So this is not what we want to see. This is, when you see this over and over and over, it's just telling you it's time to get out. This leading stocks are just not acting well, and so that's the thing. So the only thing left on our charts or on our list, which is our watch list, which we'll get to now, they're all just oil and gas. It's the only sector now that's held up. All these shipping stocks, we had a couple. Briefly, here's another one, Grindrod Shipping. It broke down again. This and high volume. Look at all these red selling days. Now we're doing higher than the average 50-day volume. Here's another one we were actually looking at, Zim. Another one, just chart was looking nicely, high volume breakdown. So again, when we start seeing this, it's time to back off. So let's go ahead. The only sector, as I said before, is the oil and gas sector. Is the only thing that's actually on our watch list at all, because almost everything else has failed. And we're starting to get a little failure action here. So they're all on our watch list. We're not buying any of them yet, especially now that we're in a correction. We'll basically just sit this out. But we'll be watching, even if we are in a correction, if we're starting to get a lot of stocks acting well, setting up in bases and breaking out and holding the breakouts and heading higher, that's when it will be giving us a sign to get back in. So, but this is acting strong. We're basically at all-time highs. Look at this relative strength line, 98 score, RS rating. It's the only sector that's doing well, and that's one of the leading stocks. So we'll be watching that, what it does. Ideally, it will maybe having a few more shakeouts, and it will sort of tighten up right under this price here, where you can see the sellers have been lurking. So if I draw a line over here, so it's not really straight, but in fact, let me just redo that so it looks a little nicer. So you can see right when it got up to this price here, which is about 23.30 or so, we did get a little breakout, but the sellers are coming. But we've been closing strongly on that. So this is an area where we have to get past this. So ideally, we get some more. Price just kind of hangs around here. Even a shakeout would be nice, just to get rid of the weak hands, and then we take off after that. So let's take a look at the next one, which is Teck Resources. Again, tried to break out twice. Here we tried to break out, closed below. We had a nice, strong breakout, closed at its highs, and then unfortunately the next 3 days sent it down back to its 21-day moving average. This is still acting fine. We're still within the base. We just had a base breakout that didn't work, but it's still acting well. We haven't broken down below the base or really giving us any signs. So this is still acting quite normal. Though if you were in it, you were hoping that it just would take off, but of course it didn't, and the market doesn't do what we hope it does. It's going to do what it's going to do. Again, another one, Pembina Pipeline, oil and gas transport company. Again, it had a nice pattern here. You can see here we had a cup. Cups are a little trickier to trade because you're always hoping to get a handle, even though this one really kind of did form sort of a handle in the midpoint, even though this algorithm didn't pick it up. But we had a nice there, broke out. This is very common. You'll see a breakout. It comes up, pulls back to its top of the breakout. It's very common. In fact, you can see it almost came exactly to the top of the breakout. Let's see. Yeah, so it's just about there. That's very common. But you'll notice that what usually happens in a healthy stock, and especially in this sector, we only had a few days of going down, and we came down to the 21-day. That's this rising green line. Got support there, and this correction only lasted a few days, and then we were right ahead heading up for new highs. Here, another short little consolidation for just a few days, headed up. Now we've got a bigger one here, but notice what happened. It came down to the 50, that's the red line, got support. Did have a couple days where it got a little dicey around there, but you can see it kept closing up at the highest of those days, and then it tightened up again here, which we would really like to see. So it's approaching its old high where the sellers were lurking, and it was able to sit there without really just busting open. And then finally we broke above that. So now we got past this resistance of these sellers, went higher, but unfortunately with the market, the overall market has pulled it back down. So again, nothing wrong with this action. This is completely normal action. It's just that the only sector that's working is this sector. So it makes you a little hesitant to get involved. Next one is Olin. This one we actually got stopped out of. This was actually one of our stocks that we owned. Again, it just looked good. It was breaking out, and the market just pulled it down. Our stop was, we actually moved our stop up just to protect our account, and we got stopped out over here. So, and the volume was high too. So this one's RS was 95, and also you notice too, the RS line is starting to flatten out. If I go back to, let's go back to the last one, Pembina. Now look at this one. It's one of the stronger ones because look at this RS line, and look at the black line is the S&P. So look how this is just going down, down, and down. It's trending lower. Well, this is trending higher. That's why the RS, the relative strength, is going higher and higher. But this one is making continues to move up while we're seeing Olin. Let me go back to Olin. Yeah, this one flattened out, so it's showing a little bit more weakness. So you can see it actually broke a little harder. So it's one of the reasons we always try to buy the strongest stocks that we can in terms of relative strength. They're the leaders. Now, sometimes you can't because they've already either taken off or they're extended. I think it's a PBH. No, sorry, that's not the one I'm looking for. I think sorry, I can't think of what it is. There's one I wanted to show you that is just the leader in the sector, and it just keeps going higher and higher and higher, and with the relative strength of 99. So that's why you try to get into the leaders. Anything in the upper 90s is great, but unfortunately we end up in Olin, which stopped us out. No big deal. Wasn't a big major move or anything, but we didn't get into some of the ones because they're the ones that usually just take off early, and then you're never able to get back into them. Hess Midstream is another one that we have on our watch list. Again, nice relative strength line. We're just watching this. It had formed a double bottom, you can see here. Tried to break out, again, just kind of wasn't able to hold that breakout. But the chart's still looking really good. So there's nothing wrong with that. And the final one is Enbridge. And again, looks just like the other ones, but really nicely trending RS lines. So, and this one actually has the benefit of having a 5.9% yield. Oh, now it's 6%. It's gone up a little bit as it's come down. And this also is giving us this RS blue dots, which means that we're heading up. The RS is a new line while the stock is at a new high while the stock is in the base. So these are all really positive attributes for these stocks. But at this point, we're being pulled down. We would like to see them kind of come up to these old highs where the sellers have been lurking and tighten up there and ideally break out. So, we have one more stock. That's it for our regular growth list. For our long-term outperformers, we're down to one stock on the watch list, and that's United Health. Let's take a look at the monthly. So this is the kind of chart we like to see. Just a nice, smooth run up. Of course, there's going to be some dips and things, especially here in the coronavirus crash. But the whole thing is that we just have a nicely rising stock price over years. The relative strength line is generally moving higher. And then when we go to the daily, this is where, let's go to the weekly first, just quickly. Again, same thing. You can see we're getting support at the 40-week moving average. Every time it seems to come down to this black line, it got support, didn't quite get there, got support. So we are looking to buy it now on a pullback to this 200-day, which is the equivalent of the 40-week. So we have our buy between 471 to 475. It's currently at 470, so we might adjust this a little bit. So what we try to do is, if it comes down to here, we will try to buy it for our long term. If it breaks too far down, we will probably exit. So that's where we are. We don't want to buy it now. It's more likely to try to buy it at the support. The only thing, the caveat on this is that in a bear market, these supports a lot of times don't hold. And also, the more times that a stock has touched these points, the more obvious it is, and then the more likely it is it doesn't hold the third or fourth or fifth time. So here we're already getting up there. This is 1, 2, 3. We'd be at the fourth one. So the odds are just a little less likely that it's going to succeed, but we'll still give it a try as long as the market is giving us some decent signs that we're okay to be buying stocks at all. As of right now, we're not there, so we're out. Well, that's about it for this week. We'll be back next week. Okay, thanks.